Greetings everyone, Joseph James here once again with your nightly newsletter brought to you by theschooloftrade.com. Today was November 17th, 2009, a Tuesday morning. Had another great profitable day here in our live trade room. Before we talk about the trades we took today, I want to remind you guys about our free resource online. Head to our YouTube page /School of Trade. While you're there, guys, subscribe to our new channel. That way you get all the videos that come out. Please rate and comment on this video. And guys, right below this video on our YouTube page, there's a link in the description for our track record. Check out our last year of trades in our trade room. Via that description, click on that link for our track record. And of course, our totals today, guys, 32 ticks on gold today. 32 ticks on gold. 320. Monday we did 32 ticks. Tuesday now we did 32 ticks. And of course, we're now averaging just about $500 a day right now on 4 contracts here in the live trade room. We did $10,000 last month, $4,400 so far this month, and of course, since May, 53,000 and change. We'll keep you guys posted, but 32 ticks here today, guys, in the market, not too bad. Term of the day today is the pace of the tape indicator, or the POT, the POT. Now, what is this indicator? It's called the pace of a tape indicator. It's a technical indicator for lifetime members. The pace of a tape indicator quantifies the speed of the tape. It's used for entries, it's used for exits, and it's used for identifying market sentiment. Now, there's 3 very simple colors: red, yellow, and green. Now, when the pace of a tape indicator is red, that means there's low speed of the tape, which means we have high risk. When it's yellow, we have moderate speed of the tape, which means we have moderate risk. And when it's green, we have, of course, high speed tape, right? Heavy speed of the tape, which of course is our highest percentage or our lowest risk time in the market. Now, in my opinion, the best use of this pace of a tape indicator is to identify the short-term market sentiment. In other words, it's that confirmation of whether or not I want to take the trade or avoid the trade. That is what the pace of a tape, or the POT, that's what it's going to do. For example, we use the pace of a tape for our entries. Right now, here's a great example, guys, here on, this was on the DAX here a couple months ago. The short-term trend here was down, right? Short-term was down. We, of course, had this swing low marked up here. We were looking for price to continue down below this swing low. But wait a second. Follow me over, guys, to the left and look at my pace of a tape indicator. We have decreasing pace of a tape, right? It's red and, of course, decreasing in speed. Now, of course, with decreasing pace of a tape, that tells me that this breaker short probably, right, will end up reversing against us. And as you can see here, guys, it certainly does. Rather than going down, price, of course, then reverses back against us. Momentum points to the upside, and price reverses. So a great example there, guys, right? Great example of how the pace of a tape can be used to identify short-term market sentiment. In this case, we were looking for a potential entry on this trade. The sentiment said, be careful out there. We avoided the trade, and of course, we saved our money because of it. Another example here, guys. This time on the crude. This is a very good example because it shows all of our different charts and how we use the pace of a tape involved with it. We're in this breaker long. We've taken our first target, our second target, and as you can see here, we're waiting on this third target to get filled. So we're trying to make up our mind, right? We're trying to decide, do we want to keep this thing on the table, or do we want to, of course, right, take our profit and get out of this market? Well, we're going to use our indicators to tell us that. Now follow me, of course, down to the lower right-hand corner here, and you'll see we have decreasing pace of a tape. Then, of course, follow me all the way over here, all the way to the left on my trade management chart. You'll notice how we have the MACD indicator shifting from above the 0 line, right, down below the 0 line. And, of course, when it does that, combine that with our decreasing pace of a tape, momentum points back down as well, and we know to take profit early. Now, in this particular trade, we used all 3 of these indicators, MACD, momentum, and the pace of a tape, to tell us when it was time to take that trade off the table. As you guys know, sometimes managing your trades is just important as the actual entries you need to get into them. So using the pace of a tape indicator, it's a great way to identify short-term market sentiment, right? Tell me to take the trade, avoid the trade, possibly take the profit early, or let the trade run. Now, of course, we're going to show you guys how we do all this live in real time tomorrow morning. Wednesday morning, come out and join us, 7:45 a.m. Eastern Time. We do free webinars on Tuesdays and Thursdays at 11:30 Eastern Time. We'll be closed on Friday for the Expo in Las Vegas. Come out and join us in Las Vegas, Sin City this weekend, and we'll be out in Las Vegas on Thursday afternoon and all day Friday. Let's talk about some of the trades we took today. Now, we had everything on gold today. If you guys were with us yesterday we took 3-4 trades on crude. This morning, we took all of our trades on gold. So again, a universal pattern. Doesn't matter which market we trade. It's a universal methodology, which means gold trading the same way that I would trade crude. So we did a pretty good job today this morning. What was your overall sentiment in the market though? Very slow, very sluggish. We had lots of news this morning. We had 8:30, 9 o'clock, 9:15, 9:30 open, 10 o'clock news. So we really didn't get anything until after 10 o'clock. We knew this going into the day, of course. We all knew that with so much news events this morning, when we were preparing for the day ahead this morning at 7:45, we opened the room, our preparation told us that we probably would have to wait a little bit to see some moves here because we had so much news events to get past first. So after 10 o'clock Eastern time, then we really began to start looking for our patterns. First trade today, we had to wait patiently here at 10:15. In this case, guys, short-term trend here was up. As you guys know, we mark these red lines here automatically on our charts via the auto levels indicator. This was at 1135.3, 1135.2. We don't really care so much about the red line so much, except for the fact that we're looking for the first swing high above that red line, which came up here at 36 even, so 1136.0. That was our swing high. We, of course, saw price come up, make the swing high, pull back, and then break that swing high, which of course got us in at 36.1 on this breaker long. Now, this guy's great example here of how sometimes you've got to be aggressive with your defense. We talked about how we use the pace of a tape indicator, the MACD, and the momentum. All three of those, when they curl against us, that's when we want to, of course, look to get out of this trade. Well, great example in this one because this happened exactly the same. We got into the trade at 36.1, but then, of course, down at the bottom, you'll see we had momentum that curled back over, right? Momentum curled over and now pointed down. Pace of the tape went from yellow now down to red. It started decreasing, and the MACD indicator shifted from below the zero line. I'm sorry, above the zero line to below the zero line, which of course told me to get out of that trade early. Now I had a 6-tick stop down here, right? 6-tick stop. All I had to do was move that stop up to my point of entry, and then let the market take me out. The reason why I moved the stop up to my point of entry is because I don't want to simply just kick myself out of this trade. What if the trade goes 10 or 15 ticks? I want to be in the market still, but I don't want to have any risk. So if I have 2 or 3 ticks of profit underneath my, under my belt, I can move that stop up, even though my indicators are now pointing in the opposite direction. Hold on to the trade, but simply eliminate all the risk. And of course, we did all that, guys, for this first trade here today. Now the second trade, though, great example of how we're looking for a breaker long. The breaker long, of course, shows signs of exhaustion, and we begin now looking in the opposite direction to the downside. Now, the two-step short happened right about up here, but we had too much support here because of this red line here, 1135.2. So no two-step short there. We had to wait for the price to actually start trending now down to the downside. We had an initial entry at 34.9, right? Initial swing low at 34.9. I actually missed that one. And ended up taking the second here at 34.5. 34.5 was our second swing low. As you can see, we started to get a little bit in the top zone here, but we had some good, strong price action. Momentum was pointing down, and of course, we took this thing short. Entry there at 34 even. We took 4, 8, and 8. That's 8, 16, 24 ticks there. $10 a tick. There's your 240 there on one trade. So in a matter of a half an hour, from 10 o'clock to 10:35 here, we were able to grab 24 ticks over 2 trades there on the gold. We weren't done yet, though. We had one more trade to take. That, of course, put 240 in our pocket, but we weren't done there yet. We had one more trade to finish up our day today, and, of course, it happened back here on the gold once again. As you guys can see here, we had this short-term trend up. We broke through this previous close of day, right? That was the reason why we didn't take these breaker longs below. Okay, the reason why we didn't take the initial breakers was because we had to go into that previous close, so beware about that, right? Always an important level of resistance to be concerned about. What we did, though, was we waited to see it get above that level, make the 37.2 swing high. We broke above the 37.2 swing high. Entry there was at 37.4. We took 4 ticks off. I'm sorry, 4-tick target. Take 2 contracts off at 4. That locks up 8 ticks there at 11.35 to put $80 in our pocket. So there's your 32 ticks, guys. 8 ticks there at 11.35. 24 ticks there previously. And as always, guys, come out and join us tomorrow morning in our live trade room, and we'll show you guys how we take all these trades live in real time. We'll show you how we, of course, use our rules and our patterns. We'll give you three weeks as part of our free trial. Grab a copy of the beginner's course on the way out to the market tomorrow morning. Please rate and comment on this video. For lifetime membership information, drop us an email at sales@schooloftrade.com. My name is Joseph James. Hope the video helps. Don't forget about the Traders Expo this Friday in Las Vegas. We'll see you guys tomorrow morning, live trade room, 7:45 a.m. Don't miss a tick. Bye-bye for now.